What is up, everyone? So today I want to talk about some of my favorite oil stocks. This is actually the sector that I'm most bullish on for 2018 and into 2019. Oil has pulled back from, I think it had a high of around $65 to $67 a barrel, and it pulled back to $60 a barrel just last week. So this provides a great buying opportunity. And in my previous video, I went over some of my favorite ETFs. But in this video, I want to go over some of my favorite oil stocks. And if you don't know, like an ETF is just a basket of stocks, but you do have to pay a small expense ratio for that. So I just want to go over some of my favorite stocks in this video. And in the next video that I put out, I'm going to go a little bit more in depth into why I'm so bullish on oil. I'll go into some of the fundamentals of supply and demand throughout this year and into the next decade. But real quickly, before I show you some of these stocks, I want to show you a chart. And this chart is a chart of the S&P 500 and commodities index and that ratio. And this chart shows that commodities are priced at the lowest that they've been really a decade, really. And I'm not bullish on all commodities. I still think, grains like, corn, soybeans, wheat, stuff like that. I really don't see any bullish signs for that. I still think we're still pretty oversupplied in those markets, but I do see some signs in the oil market that we are stabilizing down to the 5-year average for oil inventories. Supply and demand is leveling out, and I think in the next 1 to 2 years, really, we're gonna see some shortages actually in oil. And like I said, in the next video that I put out next, I'll go more in depth into that. But yeah, I just want to show you real quick that chart. It definitely doesn't mean that, just because, this is at historically low levels that we're going to see a correction here. But, the trend is your friend, and, this provides a great buying opportunity. I think that, when stocks are so overvalued like they are right now. So this is a good time to add to a sector that's been beat up and has a lot of value in it. So now I'm going to show you some of my favorite stocks. We'll just go into my computer for that. So Chevron is the first stock that I want to show you, and I'm going to go in least risky to most risky oil stocks. And when I say risky, that means I'm going to go by market cap and the companies that are most likely to weather a sustained period of low oil prices. Some of the riskier ones like Chesapeake, if oil doesn't go back up and it stays at these, Chesapeake can probably survive at these levels, but, say oil does take another downturn, which I think is very unlikely, but say it does, a company like Chesapeake does have a very good chance of going bankrupt in that scenario. So yeah, I'm going to start off with the least risky. And these stocks, you're probably not going to see as much appreciation when oil goes back up, but, that's the price that you pay for a safer stock. I know Chevron does pay a yield as well, I think around 3%. So yeah, this is, as you can see, back when oil was bottomed around 80 and now it's around 110, nice little pullback. Like I said, pretty much all oil stocks pulled back quite a bit with the price of oil that pulled back recently. I'll go to a chart of oil real quick, actually. Okay, and this is a 1 year, I believe, or no, actually this is 10 year. Okay, so yep, as you can see, oil's rallied all the way from 42 to 66. So pretty huge rally, nice little pullback here. It's rallied back to 63. So, and a lot of oil stocks actually haven't rallied that much with this. So I think this definitely provides a great buying opportunity for pretty much all oil stocks. We can go ahead and go back to CVX. Okay, so CVX, Chevron, they do pay a good yield. They pay about 4%. And like I said, with individual stocks, you're not going to have to pay an expense ratio, which, like I said, it's not much, but it does add up. This is rallied from around 100 to all the way 133, and has a nice little pullback. And it didn't really rally much with oil. And as you can see, the market cap is 200 billion. So definitely a huge company. I know Exxon, their market cap is around 300 billion, so they're a little bit bigger, but Chevron's definitely a huge company, and it provides a lot of safety in downturns. As you can see, if we go back to this is when oil was below 30 bucks a barrel, and this bottomed around 80 bucks. You're not going to see this company go bankrupt unless all of a sudden we go to electric cars, but that's not going to happen for another few decades. So we can go all the way back to '08, '08, pulled back to 67. So this is definitely a very strong company. I'll go ahead and go to ConocoPhillips, and this is a little bit riskier. They pay a 2% yield, and I do own the stock actually. Conoco and Chevron and a lot of these stocks that I'm going to mention are actually in a lot of the ETFs that I mentioned in my previous video. So it's really up to you on how you want to play this. I do like ETFs for the fact that you own a basket of oil stocks. If you don't want to go too in depth into the company's financials and future prospects, which takes hours of studying, it's definitely much easier to invest in ETFs. Just real quick, those were two pretty safe oil stocks. Now I'll show you a couple more speculative plays that might be slightly riskier, but if oil does go back up to the $80 to $100 range in the next 1 to 2 years, these are the stocks that you're really going to see go up in share appreciation. They don't pay any dividends because they are struggling financially with the level that oil's been at. But at these levels, 60 to 65, they can survive, but they're not going to be thriving. So these stocks really need $80 to $100 oil for you really to see some upside. Kind of a volatile stock, was up to 75 back in 2014, 2015, and it's rallied all the way from $7 per share all the way up to 24, and that's with oil going from about 43 to 65 a barrel. So as you can see, this really fluctuates a lot with oil price, and the market cap for this is under $1 billion, so definitely a small company. The next one I'm going to show you is Riskier Energy, and this is even a smaller company. Their market cap is around 118 million, so definitely a very small stock and very small company. 60 cents a share. This is penny stock territory. But like I said, I was going to go from the safest oil stocks all the way to the riskiest. So GNGF, definitely a small market cap, and this company is actually located in Canada. So they're a Canadian exploring and drilling company. And Canadian oil has struggled a little bit more even so than US oil. Obviously, oil out of the Middle East is the cheapest to produce. America, most sites can be profitable around $50 to $60 per barrel. That's kind of the break-even point for a lot of shale oil companies. That has come down, but in the past, Canadian oil has been even a little more expensive to produce. So this one definitely needs $80 to $100 barrel as well. The last one that I want to show you is Chesapeake Oil. I do own this one. They're a little bit bigger of a company, 2.8 billion market cap. But this has really struggled. Even with oil rallying, it's really kind of tanked until recently. Last week they reported earnings and they jumped around 25%. But yeah, this one's definitely struggled. And they're not only into oil, they're into natural gas as well. Same with ConocoPhillips. So that's it for this video, guys. I just want to go over real quick a few of my favorite oil stocks. And I do recommend, ETFs are a little bit safer because it's a basket of stocks. But I just wanted to go over some stocks in case you guys wanted to pick out some specific stocks. Of course, with stocks you don't have to pay the expense ratio, which isn't much, but it does add up over time. And like I said, in the next video that I put out, I'm going to go more in depth into why I think oil is such a great buy at these levels, and also go into a few other commodities as well. So that's it for this video, guys, and I'll see you guys in the next one.